I get hit with this huge, massive bill of $9,000 for my 6-month car insurance premium.
She went from paying $6,856 to $9,623, which means over $2,760 for a 6-month policy only. Moreno called her insurance company.
I said I haven't had an accident, I haven't had any changes of zip code or any car changes or anything new, and they told me that the rate just went up.
Feeling the pinch of inflation? It's not just groceries. Car insurance is also skyrocketing in the US, adding to the worldwide cost of living crisis. Cars are more complex than ever, filled with expensive technology and intricate parts. Gone are the days of simple fender benders. Today's cars are loaded with sensors, cameras, and sophisticated computer systems. A seemingly minor collision can lead to a repair bill rivaling the cost of a used car. Even basic components like headlights, bumpers, and windshields are now integrated with costly electronic systems. Replacing a damaged part can easily cost thousands. Furthermore, supply chain problems and global chip shortages continue to cause delays and increase the price of parts. Insurers are passing these ballooning costs directly to consumers. Think of it like this: if a fender bender used to cost $500 to fix, imagine it now costing upwards of $2,000 or even more due to the advanced technology involved. Remember when you could snag a good deal on a reliable used car? That ship seems to have sailed. The used car market has been hit hard in recent years. Factors like the chip shortage, supply chain hiccups, and increased demand have created a scenario where even used cars are becoming a luxury item. Insurance companies use the value of pre-owned vehicles to help determine how much it would cost to replace your car if it's totaled in an accident. Inflating those values means the companies have to set premiums higher to cover a potential replacement. It's a vicious cycle. Expensive used cars lead to more expensive insurance, further driving up the overall cost of car ownership. In fact, car insurance costs have jumped a shocking 26% in 2024 compared to the previous year. Could you imagine how much more difficult it becomes to replace your vehicle after an accident when used car prices are through the roof? Auto accidents can be devastating, and the injuries sustained can result in astronomical medical bills. Healthcare costs in the US continue to rise dramatically, a trend that has a ripple effect on insurance premiums. When somebody gets hurt in a car accident, the insurance company is often responsible for mounting medical expenses. As medical costs increase, the burden on insurance companies grows heavier, and they have no choice but to factor this into the price tag of your insurance policy. This means that your premium helps pay for not only your potential medical care, but also that of countless others involved in accidents. To make matters worse, there's the ever-present reality of litigation. Lawsuits related to car accidents can rack up hefty legal expenses for insurance companies, regardless of who's at fault. It's ultimately the policyholders who should shoulder the cost of these legal battles through their premiums. But why is this an issue for those of us who do pay for insurance? Well, when uninsured drivers cause accidents, insured drivers often foot the bill. Whether it's due to specific uninsured motorist coverage or a general increase in rates to cover company losses, responsible drivers often subsidize those who drive without insurance. The increasing distractions inside modern cars have also become a major problem. Drivers who text, fiddle with infotainment systems, or engage in other distracting behaviors pose a huge risk on the road. Distracted driving is a key contributor to more frequent accidents, which in turn fuels the cycle of insurance claims and rising premiums. The harsh reality is that more accidents means more claims, and those claims come with the cost that ultimately gets passed on to all drivers in the form of higher premiums. In essence, every time someone glances down at a text instead of the road, they're not just risking their own life, they're increasing the cost of insurance. Climate change isn't just about rising sea levels and melting glaciers. It's also about the growing intensity and frequency of severe weather accidents. From devastating hurricanes along the coasts to crippling snowstorms and destructive wildfires, extreme weather is leaving a trail of damage in its wake. When massive storms roll through, they often leave a staggering amount of wrecked vehicles behind. Insurance companies bear the brunt of the cost associated with these catastrophes, which translates into, you guessed it, increased premiums for everyone. It's as if nature itself is adding a surcharge to your policy. Can you recall a recent news story about a major flood or devastating wildfire that destroyed countless vehicles? Sadly, these events happen with alarming frequency. Many people lost their homes and countless vehicles were destroyed. A heartbreaking reminder of the power of nature and the tragic consequences these disasters can have. Unfortunately, insurance fraud is a billion-dollar problem, and faceless insurance companies don't just absorb its cost. Stage accidents, exaggerated injuries, and inflated repair bills all contribute to insurance payouts that far exceed their value. It's a shame some individuals see disasters as an opportunity for personal gain. Insurance fraud isn't a victimless crime. The cost drives up premiums for everyone else, creating an unfair burden for honest drivers who are doing the right thing. While the current situation may seem grim, technology has the potential to reshape car insurance in the future. Several developments are worth noting. Let's talk about some exciting changes. Many insurers now offer optional programs using little devices in your car or even your smartphone to track driving habits. Think of it as a way to prove you're a good driver. Safe habits could lead to discounts, putting you in charge of your premiums. If your car already has those fancy safety features, the ones that beep when you change lanes or even hit the brakes for you, that could potentially lead to cheaper insurance too. And maybe the most exciting part, self-driving cars. If computers are taking the wheel and they're proven to be safer than us humans, that could completely change how insurance companies assess risk. Is there a light at the end of the tunnel? Well, let's discuss why people drive uninsured. Sometimes it's defiance, but often it's a matter of basic survival. If you're choosing between feeding your family and car insurance, the choice might be clear. Raising awareness is great, but stricter penalties on already struggling people could make things worse. Is there a way to balance enforcement with offering affordable pathways for people to legally get on the road? That's a tough question with no easy answer. Then there's the tangled mess of healthcare costs. Car accidents often result in injuries, and those injuries are crazy expensive in the US. That cost gets bundled into everyone's insurance premiums. Imagine if we had a healthcare system that wasn't so focused on profit, one more focused on actually caring for patients without bankrupting them. We might see that reflected into our insurance bills. Of course, overhauling the healthcare system is a whole other beast to tackle. Technology does offer some hope. Insurance programs that track your driving habits have the potential to reward safe drivers. You get to prove you deserve a lower rate. Of course, this gets into privacy concerns, and we need to make sure those systems are fair. Additionally, as cars get smarter with features that actively prevent crashes, it could lead to fewer claims and lower rates. But it'll take time to see how that plays out across the industry. The bottom line is that there's no single magic fix for car insurance rates. We need to consider this from various angles: enforcement, healthcare access, technology, and it's going to require a whole lot of people who don't always agree to actually start working together. Let's not forget that even with potential changes, car insurance is likely to remain a significant expense. Being responsible drivers taking advantage of available discounts will continue to put us in the best position to manage those costs. The skyrocketing cost of car insurance is a multifaceted problem with no easy solution. It's a financial strain on countless Americans, and it's becoming increasingly difficult to justify the cost for many. While we can't control all the factors driving these increases, there are steps we can take as individuals, such as driving safely, comparing insurance rates, and supporting technological advancements. It's also a call for broader conversations about distracted driving, the uninsured motorist problem, and how to manage healthcare and legal costs more effectively. Perhaps this crisis will spark long-term solutions that make auto insurance more accessible and sustainable for everyone. But here's an important note: even while costs rise, it's crucial to remember that driving without insurance is never the answer. The financial and legal consequences far outweigh the temporary savings. And that's it for this video. We hope you enjoyed watching it and learned something new. If you did, please give this video a thumbs up and share it with your friends. Also, don't forget to subscribe to our channel and hit the bell icon to get notified of our future videos. Thank you for watching, and see you next time.